Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 15th, 2010. Now to get started for today, the first pair we're going to be looking at is in the foreign exchange market. We're going to review the US Canadian pair. Now we can see here that the triple EMA crossover is getting ready to make its final cross to the downside. This is a fresh crossover from vantage point. We can see looking back here, we haven't had a crossover to the downside in quite some time. We've been in an uptrend, essentially in somewhat of an uptrend since about the beginning of April. We can see that the crossover has taken place. We've moved from the parity level up to about the 108, but again the 108 has capped the market, hasn't been able to get through this area, so this suggests that the US Canadian pair could be getting ready for a bigger move to the downside. Now we can also assess from this that the highs are lower and the lows are lower. So with this triple EMA crossover just about complete, that's the 3-day and the 8-day crossing over the 18-day predicted moving average, this again suggests to me that we're getting ready for a bigger move. So for tomorrow, what we're going to do is we're going to identify that we're getting into this position short. Our predicted medium and long-term differences are sitting at about 60 and 90. Everything looks good there. Predicted MACD has crossed the trigger to the downside, as is the predicted true strength indicator crossing the trigger right here. This is sitting just above the zero line at essentially, in my opinion, trend ready levels. So with that said, now let's go in and have a look at the daily report and see what we have for our predicted highs and predicted lows for tomorrow and what we can expect. Now we can identify with the 18-day predicted moving average 104.11. All stops will be above that area. We can see that we have 104.11 right here. So again, stops need to be above this area. We do not want to get caught here with a quick bounce higher and then taking out those shorts. So again, we've closed at 103.38. Interesting point of interest here, we closed at 103.39 on Friday. Friday we closed at 103.38. That one pip kind of makes me laugh because it can be used as an indicator to suggest we still got that lower close, but more importantly, right here, 102.25 is the low today. That's substantially lower than what we got on Friday. So here we have 104 is our high, neural index is down, predicted short, medium, and long-term differences all gaining strength. The short term, not quite as much, but the medium and the long term still gaining strength to the downside. So we have 104 is our predicted high for tomorrow, 102.66 is our predicted low. Personally, I don't think we're going to get quite to 104, but let's have a look at again at our three main predicted moving averages. We have 103.53, 104.11, and 104.31. So excuse me, all stops will be above the 104.31 area. For tomorrow, we want to enter into short positions between 103.53 and 104.11. Anywhere in that area, my bias is to the downside at the 103.53 area is likely to hold. We're going to get into the short positions there, stops above the 104.11. Now again, this trade is shaping up, looks quite good for a continuing push lower. Now that's our first position. Our second position, we're going to go back and revisit the natural gas contracts. We've been trading this, only buying natural gas contracts for essentially the last 3 to 4 weeks, doing quite well. We can see here that we're getting into somewhat overbought territory, but with crude oil, things that are happening with that, my opinion is the natural gas is going to continue to appreciate. So with that said, let's go in here and have a look at the daily high and the daily low. The triple EMA crossover has made its cross at the $4.20 mark. This is still a relatively fresh buy signal in my eyes. So again, we're going to go back into the daily report, have a look at what we can see if there's any signs here that this thing is getting ready to reverse. Now we have 271 on the long term is certainly a concern. That is overbought. 139 somewhat overbought, as is 125. But again, point of interest here is that in the short term differences, we were actually negative and we've turned positive now. So for tomorrow, 484 is the low, 511 is the high. On a pullback to 484, we want to use that pullback to get into buy positions, because again, my position is that based on the analysis and what's happening with crude, the equities, and everything else, is that natural gas is going to continue to appreciate in value. If we look further out to the 2010, 2011, and 12 futures contracts, they're all pointing towards that $6 mark. So just because we're at a high, that doesn't mean we shouldn't be buying. Or we should be selling at just over the $5 mark. We want to continue to buy in dips until we get a signal. In this particular case, we would have the majority of our stops should be below the 424. Preferably below the $4 mark. So, and in a target here, so 484 is our target. We're going to be looking for a move probably towards that 520. I still think that this is a good trade also on the ETF side. So with that said, let's actually move into the ETF market. Those are for our third trade for tonight. Now we've looked at the currency market, the commodity markets. We're now going to go into the ETF markets. Now individual stocks still a little volatile in my opinion, so the ETF certainly can limit some of that volatility. Now bringing this up again, we are going to stick with the Taiwan EWT, the Taiwan Index. I really like this index. This was put out as a buy signal just last week. We're going to continue with this. What I want to point out here is we have a buy signal from Vantage Point. That's the 3-day crossing over the 8-day predicted moving average. We have our predicted medium and long-term differences, both pointing higher, moving above the 0 line. Predicted MACD has crossed the trigger, also supportive. Predicted true strength indicator still in heavily oversold territory, but again supportive of the buy position. So looking at our major levels, we have 1138, 1125, and 1133 with a close of 1139, just above this 18-day predicted moving average. That's a very good indication that this index is going to start moving higher. We can see that we have 3 or 4 candlesticks sitting just above this 1050 mark. Looks like we have a good base forming here. I see no reason at all why this EWT should not move back into this $13 area like we were in the 1350 area just last month, or not last month, but excuse me, April 20th. So this, in my opinion, is a corrective move. We're going to see the US dollar weaken, and all these other things are going to happen. The commodities will strengthen, and that will give way to strength in some of these ETFs. Now the spider financials and stuff like that, we'll have to see how that one plays out. That's why I'm moving our trades here somewhat offshore into the Taiwan Index, because everything is still going quite good there. Now let's quickly go into the daily report. Let's see what we have for our predicted high and our predicted low for tomorrow. Now, having a look at that, we can see here that we've closed the day at 1139, so that's the strongest close we've had in several weeks. So for tomorrow, we're looking at a very shallow pullback, only to the 1134 mark, with a move to 1155. So for your day traders, there's still a good 20-cent move there, but for your position, your more medium to longer term traders, we want to be looking at the 1250 to 1280 mark as a target within the coming weeks. I see some very good value in this particular index at these current levels. So those are the market positions for June the 15th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.